Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Welspun Enterprises Limited, hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from DAM Capital. Thank you, and over to you, sir.
Thanks, Steven. On behalf of DAM Capital, I welcome you all to the Q3 FY22 earnings conference call of Welspun Enterprises. We will start with a brief introduction, followed by Q&A. To start the proceedings, I'm handing over the call to Mr. Abhinandan Singh, Head Investor Relations. Over to you, sir.
Good afternoon, everyone. I hope all of you and your dear ones and team members have been staying safe during the latest wave of the pandemic. As Mohit said, I'm Abhinandan Singh. I have recently joined Welspun Group as head for the group investor relations function. Present along with me today on this forum are Mr. Sandeep Garg, Managing Director, Mr. Ajay Hans, CEO, Mr. Akhil Jindal, Group CFO and Head Strategy, and Mr. Sanjay Sultania, CFO, Welspun Enterprises. You would already have received the results. Those results are also available, in our filings with the BSE and NSE. Just wanted to point out that you need to note that a copy of disclosures are available in the investor section of the website of the company, as well as in our filings with the stock exchanges. Do note that anything that's said on this call which reflects the outlook towards the future or which should be construed as a forward-looking statement must be seen in conjunction with the risks that the company faces. Should you have any queries that remain unanswered post this earnings call, you can reach out to us. The email addresses, etc., are all available both in our filings as well as on our website. With that, I would like to hand over the forum now to our Managing Director, Mr. Sandeep Garg. Over to you.
Thank you. Good afternoon, ladies and gentlemen. On behalf of Welspun Enterprises, I welcome you all on the Q3 and 9-month FY22 earnings call. I hope everybody is safe and in good health, and you all are taking precautions to deal with the ongoing third wave of COVID. I will take this opportunity to once again introduce Mr. Ajay Hans, whom I had introduced last time as CEO, and I would want to inform you that he is now Managing Director and CEO designate for Welspun Enterprises. I had also introduced last time Mr. Sanjay Sultania, the CFO of Welspun Enterprises. I would want to request Ajay and Sanjay to take you through the business, operational and financial side of the business, while me and Akhil are available for any questions and answers or any queries that you may have. Over to you, Ajay.
Thank you, Mr. Sandeep, and good afternoon, ladies and gentlemen. The financial results and investor presentation of this quarter has been uploaded on the exchanges, and I hope everyone has gone through the same. Recent surge in COVID-19 cases on account of rapid spread of Omicron variant have forced countries to reintroduce strict lockdown measures. However, this time the effect on global economy has been rather scattered and limited. Before sharing with you the project-related developments and operational highlights, I will briefly touch upon government thrust on the infrastructure sector, as well as our strategy to encash upon the growing opportunities. Infrastructure development is the key focus area for the government to achieve a GDP target of about $5 trillion for 2025. To achieve this, an estimated overall infrastructure capex needs to grow at a CAGR of 11.4% over FY21 to 26, primarily driven by spending on water supply, transport, and urban infrastructure. The government has, over the years, allocated strong budgetary support to the infrastructure sector, which has been continued in the recently presented Union Budget 2022-23 on 1st February 2022. The major announced was expansion of national highway network by 25,000 kilometers in the financial year 2022-23. According to the IBF, highway construction has increased by 17% CAGR between financial year 16 to 21, with around 13,298 kilometers of highways being constructed across India in financial year 21. The Government of India has allocated rupees 111 lakh crore under the National Infrastructure Pipeline for financial year 2019 till year 2025. The road sector is expected to account for 18% of capital expenditure over financial year 2019 to 25. Now, as far as the water sector is concerned, improving water security is essential for India's development. With the expected increase in water demand for over 70% by 2025, the huge demand-supply gap is expected in coming years. In 2019, the Government of India has introduced Jal Jeevan Mission to provide functional household tap connection, that is FHTC, to every rural household by 2025. That is Har Ghar Nal Se Jal. The estimated project cost for the mission is rupees 3.6 trillion, through which around 146 million rural households will be provided with FHTC connections. During the Union Budget 2022-23, rupees 60,000 crore has been allocated to this scheme to cover 38 million households in financial year 23. Now, moving on to the Welspun enterprise strategy, we have been selective in evaluating and pursuing project opportunities and have been focused into bringing a strong infrastructure player. With a diversified presence across road and water space, our emphasis is also towards building EPC orders from external clients engagement, which is currently about 60% of our total order book. We are focused on road sectors and simultaneously looking to grow our exposure towards water space, where we anticipate a significant opportunity over the next few years. The order book as on 31st December 2021 is around 7,680 crores. Road sector contributes to 5,162 crore and water contributes rupees 2,525 crore. I am delighted to share that the company received PCOD of the package number AM2 under Public Works Circle Amravati in the state of Maharashtra from NHAI on November 11, 2021. With this completion of the company's total HAM road portfolio of 7 projects of around 10,000 crore, 5 projects of around 6,300 crore have achieved PCOD and COD. We expect to receive PCOD for Mukarba Chowk Panipat project in Q4 FY22. Post some delays on account of external factors, We are also evaluating assets monetizing opportunity of our 5 HAM projects and 1 BOT project. With this, now I hand over the call to Mr. Sanjay Sultania for the financial highlights and project status. Over to you, Sanjay.
Thank you, Mr. Ajay, and thank you, Mohit, and my dear friends, ladies and gentlemen. This is the first opportunity I'm interacting with all of you as a Chief Financial Officer of this company. And before I start on the financial highlights, I would like to explain you how the Q3 results has been derived. First of all, I would like to appraise all of you how we are moving in terms of execution from the order book that we have currently. We have started our journey with HAM projects and we built the portfolio of 7 HAM projects and 1 toll-based BOT projects, out of which 5 HAM projects has been achieved PCOD and 1 BOT project PCOD is likely to be achieved in the Q4. Now let us understand that the major EPC revenue of the completed project have been accounted for in the previous quarter and previous years. At the moment, EPC order book of water and road is going to be the revenue drivers in the ensuing quarters, as the site in both the projects have been fully mobilized and we have started accounting minor revenues out of these 2 projects. The major visibility will be seen in the ensuing quarters. And I would say, and I would stress upon, this would be the major and primary reasons that Q3 revenue looks stressed in the standalone basis. And further, the ongoing farmer agitation and NGT ban in one of the large BOT projects in Panipat has also got majorly affected due to that. Otherwise, I'm sure we would have been in a position to account for the revenue as maybe slightly better than the previous quarter. As you know that as a company, we are into 2 lines of business. One is the developer business and second is the EPC business, where the EPC order book was basically flowing from our developer business. But now the situations are changing. Currently, 60% of our order book is flowing from external engagements, where we are doing 1 large project in National Highway number 2, which is Varanasi-Aurangabad road project. And another is the water project, which is also in a large size, which we are doing in the UP under Nal Se Jal scheme. So these, as I said, these 2 are going to be our major driver in the ensuing quarter. But as we touch upon the business for our EPC and the business for developer, now the EPC, as I explained, is going to take the major driver. And so from this quarter, we have also included our consolidated results to the investors, and I would touch upon the developer business results also, because at this point of time it becomes relevant because we have completed 5 projects and revenue is flowing in the console out from the EPC business as well as from the developer business. So it will be more relevant to understand our consolidated results also, along with the standalone results which we have been discussing with you in previous quarters. Now coming to the financial highlights, I would like to say that we have reported a revenue of 225 crore on a standalone basis as against rupees 288 crores in Q3. EBITDA was at 22 crore as compared to 34 crore in Q2 FY22. EBITDA margin in Q3 FY22 was 9.9% as against 11.7% reported in Q2 FY22. I am comparing this from the last quarter to this quarter rather than comparing from this Q3 to the last Q3, because in the last Q3 the pandemic impact was major, and in this Q3 the impact is major, as I explained to you that our developer business order book has got executed mostly, and now the new 2 projects, which is our Varanasi-Aurangabad and UP-JJM, is taking the driving seat. Now coming to the 9-month standalone results, we reported a standalone revenue of rupees 867 crore as against rupees 933 crores. If you see on the 9th-month basis, the Q3 impact is more vigilant here in 9 months as well, and the reasons has been
has already been explained in my earlier remarks. And if you see the EBITDA is 97 crore as compared to 127 crore in 9 months FY 2021. If you are tracking the results of Welspun Enterprises, you will be knowing that in full year of financial year 21 and this quarter, our major projects which were driving the revenue was Mukarbat Panipat Chowk, was CTHPL, was Amravati projects in the state of Maharashtra. As I said, these 3 projects are getting, 2 projects we achieved the COD, and third project, the BOT Panipat, we are likely to get COD in this. So the order book is getting depleted. Now this new order book, which is close to about 5,000 crores, is coming on the driver's seat, which will drive the onward quarters. Now coming to the standalone, the consolidated revenue. During the Q3, we reported a consolidated revenue of 284 crore, out of which EPC revenue from EPC is 240 crores, and from HAM business is 37 crores, as against 343 crore in the previous quarter. In the previous quarter, revenue from EPC 300 crore and revenue from HAM business 37 crore. Absolute EBITDA was at 57 crore as compared to 68 crore in Q2. EBITDA margin in Q3 FY22 is 90.9%, similar to last quarter, which is FY 2022. If you see the absolute EBITDA in this consolidated business is going to be increasing from here onwards, and which will bring a business sense of a developer business when we report to the consolidated results. So everybody will have in mind that how absolute EBITDA looks as far as when we refer to the consolidated books. Moving to the 9 months FY22, we reported a consolidated revenue of 1,040 crore, which is coming from EPC business 917 crores and HAM business 109 crore, as against 1,071 crore revenue from EPC is 960 crores and revenue from HAM is 71 crores in compared to 9 months FY21. Absolute EBITDA was at 197 crore as compared to 206 crore in 9 months period of the last financial year. On the balance sheet side, our gross debt is at rupees 475 crores on a standalone basis, and we have our ongoing HAM projects where the executions are happening, and we are nearing to the PCOD. So we will have some equity commitments in my ongoing projects also, which has been estimated at 227 crores at this point of time. With this, I open to floor for the questions and answers, and thank you very much for your patience hearing. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Shah from GC Holding. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. I have 3 questions. Firstly, if you can just separately give the total project cost and what is our equity in the 5 HAM projects where the PCDs has been achieved, and even Mukarbat Chowk, because these 6 projects will be up for monetization, right? So if you could just give the breakup of this, the total number, the total project cost as well as the equity component.
See, the equity component, if we are able to monetize these 5 HAM projects and 1 BOT projects, we are expecting the unlocking of equity to the extent of 1,400 crores. Potential upside we cannot know today. As we progress in sale, we will come to know and we will share with you. An estimated project cost would be close to 10,000 crore.
How much?
10,000 crore.
10,000 crores is the estimated project cost, and you expect the unlocking of 1,400 crores.
1,400 crore.
Okay. And the second is, I mean, there has been some news reports about we being at the advanced stage of negotiations. Can you just give some views at what stage are we, whether we've started or, I mean, any color on that?
My dear friend, as I explained in my opening remarks, that 5 HAM projects and 1 BOT project, we are in a position to monetize, and that is available for sale. Yes, a lot of investors are coming and talking to us, but when it gets fructified or crystallized, maybe we are the first persons to come back and share with you.
Perfect. So, second question is, our total pending equity commitment as of September was 180 crores. It seems that we have infused another 59 crores in this particular quarter. So, since we have not added any orders, our pending equity commitment should have been 120 crores. But instead of that, we are seeing a 227 crore number from the presentation. So, if you can just share some light on which projects is seeing a higher equity commitment from us, what changed in this quarter?
No, see, what is happening as we are progressing in the project, and as I said, our large equity investment in the BOT project, and we have currently 3 ongoing large projects in HAM and BOT, which is Anta Samaria, SNRP, and NCP. And you know, all these projects are slightly, I mean, these 2 projects are slightly delayed in terms of completion, and the prices are soaring up in the market for steel and everything. So there could be some escalations on this account. And for the escalations, as you know, that the 40% maybe it will come from NHI, but 60% we have to account for from the equity for the time being, which may crystallize as we get the annuity or toll going forward. So for that, as a conservatively, we have estimated that 227 crores that we may plan to infuse in the equity, and another is the oil and gas business for the next 1 to 2 years horizon. As the project goes on, we have just budgeted for that account for also.
Okay, so broadly we are budgeting for 100 crore increase in equity commitment, and because large part of it does go through the road projects itself, so you were saying that the project cost escalation on this thing is close to 800 odd crores.
It's not 800 crore. See, as I said, that when we are having the escalation, then 40% in the HAM projects will come from NHI and 60% we need to invest. So this is not a debt equity ratio that it count for, because this is an escalations which will come in the project, let us say 100 crore. So 100 crore we need to fund. Maybe 40% upfront may come from NHI as we progress in the project, and 60% will come along with the annuity and toll. So it is not vice versa that there is a cost overrun or something like that at this point of time. Okay. But when we do the revised CTC on a monthly basis, on the basis of CTC, when the price escalations on price are in the right trend, WPI index also the right trend, we keep on budgeting.
Okay, so broadly just to make it very clear that 100 crore increase, part of it will be funded from NHI itself, so not everything will come to us.
No. So I think let me clarify this, Akhil Jindal.
Yeah.
This is not about the funding. Basically, any cost increase is either to be funded out of equity or debt. Okay. Now, at this juncture, we have not accounted for any debt increase.
Okay.
We only accounted for what we may receive from NHI. And other than NHI, we have presumed that everything will be funded out of our own contribution, unless we tie up the debt or get a lender's approval for a higher debt equity.
This is a conservative number.
That's right. So
got it.
That line.
Yeah.
So your calculation of 100 versus 800 is slightly skewed. You are right. Traditionally, our equity component is 12%, so you have done that math. I understood the logic. But the fact is that today we are not doing any cost escalation from our additional debt.
Got it. And Akhil sir, just last question. Brent is close to $90. Just any update? I mean, are we trying to accelerate our monetization of oil and gas asset, or still the thesis remains the same that upon production only then we'll look for new buyers? If you can just share some thoughts, because $90 there should be a lot of interest for our fields, for our oil and gas asset. So if you can just share your thoughts on this particular thing. Thanks.
I would let Sandeep answer this because
Yeah.
Hello.
Right.
Sure.
Peter. Yeah. So oil and gas, you're right. The commodity cycle is at its peak, and unfortunately or fortunately, both our fields are gas bearing, and gas is something which is a sustainable price increase because of the LNG, etc., etc. So in terms of monetization, the initial exercise was to try and get the reserves certified. We are likely to get the certification from the internationally acclaimed DNM authority within this quarter, post which we will be in a position to decide how to monetize this asset going forward.
Got it. Yep. Thanks. Thanks, sir.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rohit from Antique. Please go ahead.
Yeah. So thank you for this opportunity. I'm not too sure if I missed the opening remarks, but have you, sir, what could be the outlook on this Panipat BOT project? Earlier, this farmer agitation was impacting the execution. What is the situation now? Now that I think that should come back to the execution mode. So how much of execution can we expect in 4Q, and how much do we anticipate that number to translate in FY23?
So to answer your question, you're right. The farmer agitation has been called off, and it has given a big respite, both in terms of execution and the PCOD of the project. It is also true that the project is now in a situation that it can be pushed for completion. However, as you are aware, NGT had put a ban for the execution between December, January, becoming an annual affair right now in NCR, which is impacting our ability to progress the project. However, it is in the end of January we have a clear access to the site as well as the clearance from NGT. So next 2 months we expect the progress to take place and the PCOD to be achieved within this quarter.
Sure. Sir, my second question will be more to do with the other projects. Earlier we had some sand impacting issues, the TNNHAI project. Then rains impacting, we had Anta Samaria. Now, what happened to those projects, sir? Are they like back to normalization, or what exactly is the situation over there?
I think you are referring to our Anta Samaria project and SNRP project.
Correct.
Yeah. So these 2 projects have been streamlined, and we have mobilized in full swing. Works have started. So you will see the turnover coming right from next month onwards on these projects.
Okay.
As far as the ASR project is there, it's a running project, and we have achieved a milestone of 30% progress in that. And continuously going forward, we are targeting to continue a good progress on these projects. These are fully mobilized, and work is going on in full swing.
Okay. So if I have to say that earlier we were talking about an order backlog that you already have of 75 billion plus, or maybe 76 billion, or that kind of amount, we could be in a position to do 30 billion execution by FY23. What is the situation right now?
Yes, this is Sanjay Sultania here.
Yeah.
See, when you talk about the order book that we have at 76 billion or precisely 7,600 crore, you must understand when this order was bagged. You see, out of 7,600 crore, roughly about 5,000 crores is getting mobilized in this quarter. This you can say this could be the first quarter, and the second quarter when it comes, then we can see the visibility of execution. Because you can say this is the first financial year that we have started mobilizing on this order book. And the balance order book is coming from our developer business, which is ongoing, where we have already discussed that SNRP it slightly has been a challenging project, which now Mr. Ajay Hans said now this project is also coming on the track. So when we talk about 5,000 crores, then in FY22-23, maybe from the next quarter onwards, we will have a more visibility because the project is just mobilizing. And next financial year, as I said in my opening remarks also, is going to be the revenue driver for the financial year for these two projects, which is UP JGM, which is our water project, and this road project, which is National Highway number 2. These two projects going to the revenue driver for the current financial year, or I would say current quarter also.
Sure. Sir, if I fairly understand, earlier you were talking about an L1 of 35 billion, this MCGM project, municipal water body project. What exactly is the situation over there, sir?
I would request Mr. Sandeep Garg to put some highlights on this, please.
So the situation is that a couple of days back, the projects have been, the tendering process has been annulled, and the process of rebid has started. So we had opened L1, but that process will no more be carried forward. We will have to rebid for the projects.
Okay. So, sir, in terms of order inflow, in that case, what exactly is the strategy ahead? Like, will we be focusing only on EPC projects, or will it be a mix of HAM plus EPC? How is that strategy looking like?
So, I would request Ajay to take it forward because he is the managing director designate, and we will take it from there on. Yeah.
Sure.
Yeah, I would say it will be a mix of the projects, both HAM as well as EPC. Like we are trying to unlock some equity. So the moment we have some unlocking on this, we will continue to win new HAM projects, as well as EPC will be the focus simultaneously.
Okay, sir. If I have to, look in terms of the order backlog, how you want to strategically position us? As in, do you want to have 50% EPC, 40% HAM, 10% water projects? How do you, visually look at this strategy from a strategic point of view? How do you see that number?
Going forward, it's very difficult to say right now, but on a very approximate basis, it might be 50-50.
50% HAM and 50% will be EPC.
Yes, that's correct.
So earlier, I was also given to understand that you were looking at some railway projects too. For case in point, that Lucknow railway station as a DBF40 project. But what happened over there?
Look, we have submitted our pre-qualification bids for these projects, but there are uncertainties and planning at the government side. So we are waiting for it. The moment these things are clear, we will go ahead with it. But we are exploring the real feasibility on these projects.
So help me understand, sir, the strategic part. Like once you said you HAM and EPC, and now you also want to take up the DBF40 model of a railway project too. So that's like a asset-heavy business model. It will look very different from what you are doing, right?
That's correct. The main focus is on HAM and EPC, where we have the clear visibility. These are the new areas which we are exploring, and we might be exploring some other areas which will be bringing it to you from next quarter onwards.
Okay, so strategically earlier that we wanted only road or maybe mix of road and water is now going to foray into railway and other sectors too.
Yeah, so let me address this. That the strategy is clearly derived out of one simple thing: what is the competitive intensity and what is the ability to have profitable business. As you're aware, road is right now highly competitive environment. There is, and as management, it has been decided to be cautious in that area till the time the pricing gets stabilized and the commodity prices also stabilize. As a prudent business house, we will want to continue to de-risk the business. So we look at the adjacencies. The adjacencies to the road are also the railway. So we are looking at railway, and if the risk and reward is something that we are willing to take a position on, we will go ahead with those options. Otherwise, it will be an exercise of exploration.
Sure, sir. That's it from my side. Thank you. Thank you for taking up all these questions.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah, hello team. So my first question, like you mentioned that the mobilization has come in this quarter, but if you have to give some number, like ballpark number for FY23 execution, so what kind of EPC revenue we are building for FY23?
Okay, like as we have told, our EPC order book is around 5,500 approximately as of now, and generally these projects goes in the range of 2 years to 3 years, depending upon when you get notice to proceed and clearance to go ahead on that. So looking into these figures, we are looking at, I feel it should be improving. The turnovers must be improving. You can see those numbers started improving from first quarter of the next financial year.
No, that looks possible because this quarter is absolutely like the number is very low. But as a ballpark number, like will we be doing 400-500 crore of quarterly run rate now going forward, or is this is still a tall task from here?
No, this is Sanjay Sultania here, the CFO of the company. See, it is very difficult to quantify at this point of time, but as I said earlier also, maybe I'm sure you must be on the call, that this EPC project, which is water project, and the WAR project, which is Varanasi Aurangabad, is taking the driving seat as far as revenue growth is concerned. And I also said that in Q3, this site has been completely mobilized, and Q4 we will start recording the revenue out of these two projects. And so FY22, FY23, from that perspective looks very bright, but at this point of time, quantification is difficult. But any hindrances or any other kind of sort of challenges, we are not perceiving at this point of time.
Okay. My second question is on order inflow guidance. Would you be able to have some thoughts there, like what is the kind of order inflow we are targeting, let's say in FY23, and in fourth quarter also?
Like I have, like MD has told that we will be bidding very cautiously on the road side for the time being, looking into the hard competition, and simultaneously we will be exploring contracts from other new areas which we are exploring. So, and water is going to be another main focus sector. So we are looking forward for high value contracts in all of these 3 areas. So there should be a decent order book which should increase time by time.
Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. And we've been tracking this company and sort of been small investors since a long time. Just had a couple of questions with regards to the initial, I think, aspirations as we were expanding into infrastructure was to effectively focus on HAMs, given the comparative intensity was low, and looking at 18% actually plus equity IRRs. From what it's appearing, at least from the commentary from the asset sales which we will do in HAM, obviously those equity IRRs are looking at a bit of a stretch. So as a starting point, just wanted to understand what actually went wrong with what we initially thought of in terms of the thesis, and if you could also explain to us the plans with regards to the reason why this time around we see things differently.
So I think there are 2 parts to the question. Number one, where did the thesis go wrong in terms of our revenue, our returns on equity? I think the equity returns have to be seen in light of the EPC profit margins as well as the margins that we are making on the equity sale. So the EPC margins have come through. However, because of the substantive changes in the policy of the government, which is because of the COVID, the bank rates were artificially lowered. And as you recall, with the bank rate, the regime in which we bidded for HAM projects was bank rate plus 3%. The overall returns have gone down. Also, the implication of GST, implementation of GST, and the position that is NHAI has taken to the GST, 40% of the GST will be paid and the balance 60% over the annuity period, has eroded certain returns on the equity invested. In terms of the returns on the sale, the expected the equity will be in the ranges of anything between close to the numbers that were invested or there around. The challenge, I don't think that this is the hypothesis went wrong. It is the buyers. The other thing that has changed is that it has become more of a buyer's market because along with us, the TOT, the completed projects of other builders, other developers are also into the market. And since we are not a stressed company, we are not selling at a discount. So the overall, I don't think that there's a change. The situation is that the market itself has evolved differently than what it was supposed to, is my take. In terms of the future business, that's what you were also talking about. Is the relaxations that the government has brought in for the bidding parameter, that there is no bank guarantee requirement for the bids to be put in. The qualification criteria have been relaxed. The competitive intensity has grown too much, and the business itself has become very competitive. And that's something we are very cognizant of. And then we are trying to evolve a business strategy to make sure that we do not get into a trap of winning companies curse.
No, so got it. So look, there were obviously this is stuff which we had not expected, which is why the initial Welspun Enterprise 1.0 has not unfortunately delivered the kind of returns on the project. But in the 2.0, exactly as you're saying, given effectively speaking the kind of increase in competitive intensity, and especially earlier you were highlighting how EPC especially is highly commoditized, if you will, and obviously everything is on L1. So what is the strategy of being able to sort of earn attractive returns? I mean, how do we differentiate ourselves to be able to do that?
So there are two things. That one, fortunately for us, we have a very healthy order book given the kind of turnovers that we have, and I don't think this is sustainable. That this type of competitive intensity is sustainable. That may be where EPC contracts right now are going anything between -25 to -35. And the HAM projects are going at -5 to -15%. I don't think it's a sustainable model. This kind of excessive pricing cannot sustain for more than a few quarters, and balance will get established. So we have the ability to wait it out. We are not starving for order book right now. We have enough on our plate to be able to keep the projects going and the turnover coming in. The current focus for us is more to concentrate on delivery of the projects that we have. There's enough on the plate. By the time I'm sure the business realities will down upon everybody, and the pricings will come into the reasonable shape for us to start winning projects.
Like a catch-22, where if the projects are going smoothly and there is no problem with the government and the payment, then the kind of competitive intensity continues to be high, where it's then hard to actually make a high degree of return. And in the event that problems arise and, people are stretched in terms of balance sheets or order books or whatever it may be, that's when it becomes attractive. So then it's sort of either the industry is going well, in which case competitive intensity is high and profitability low, or there are other issues in the industry, in which case any case is all right.
So as I said, we've added the water business line where the competitive intensity seems to be lower. As well as there you will know that there is a clear BOT bidding that is happening, and we are mindful of this BOT bidding where the competitive intensity is pretty low. If we will structure our risk reward model around that and see if those projects make sense.
Got it. Understood. So I did that. Thank you. That's all for me.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Ajay Hunt, CEO at Welspun Enterprises Limited, for closing comments. Over to you, sir.
Thank you, Mohit. I would like to once again thank all of you for joining us today. Your questions were insightful, and I appreciate your interest in our business. As I mentioned earlier, we have a robust portfolio and a strong order book with a couple of large projects having been mobilized now and starting to generate incremental revenue. We remain committed to uphold our operational excellence and deliver progressive performance. I look forward to speak to you all once again next quarter. Meanwhile, please feel free to reach out to me, Sanjay or Abhinandan for any clarification or feedback. Thank you.
Thank you. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.